Hey, good morning to everyone. Winston Kutsia, aka Mr. Mayor Forex Trading. Good to have everyone online. All right, so today I'm just going to do a quick run through the markets and give you my analysis on the markets, and then we'll see from there what happens. And yeah, if you have any thoughts or anything you want to talk about, any markets you want me to have a look at, we can absolutely do that. I'm still going to jump to trading view quickly. Let's jump in there. All right, so if you have any markets or anything you want me to have a look at, we can definitely do that for you guys. But I'm going to focus today a little bit on the gold. And like I said yesterday, I said with the gold we're going to have sideways movement. So that's what we've been having on the video yesterday. You'll also see it when I spoke about it. I spoke about the sideways movement that we're going to be having because the markets are waiting for the jobs claims, which is happening at 2 South African time, 2:30 at our time. So it's the unemployment claims that the markets are waiting for. That one will determine a direction for the market to take. I'm working on my phone as well. I do have a second screen here, but for some reason I do need to get a new adapter for the new screen, so I'll do it someday. But for now I'll just manage this on my phone as well. Alright, so that is what we're waiting for, and that's why yesterday also I did tell you guys that we are the market. I told yesterday's video, you can go back where I told you guys that the gold is going to go sideways, and as you can see the whole day yesterday, this is on a 4-hour time frame, you can see is just sideways movement on the gold. We don't have a precise movement or something like that, so I know they are waiting for that unemployment claims to come through. So we'll have a look and we'll see when that happens and how that happens. I'm just waiting for my phone also just to come through. Alright. I think that is it. Let me get everything is cool. Nice. Alright, so if you guys want something, put it in the chat. You want me to have a look at something, the euro, the dollar, gold, silver, Bitcoin, whatever you guys want me to have a look at, please just ask and I'll have a look at it. But I'm going to start doing my analysis now quickly and run through this whole process of where I think the market is going to go. And do remember, this is just my opinion and my thoughts. It's not a given. It's not like, oh yes, that is the way it is. And markets change, conditions change. That's why you need to have a good system going, and always remember that your lots and your size of trading that you do must be proportionate to having at least 5 losing trades in a row without you having to actually start worrying about your account. You can't trade 5% or 10% of your account on one trade, because that's the easiest way that you are just gonna go bust. All right, trade on 1%. Only try and use 0.5% or 1% of your account when you do trade. Don't go. I know there's a lot of people online, a lot of these Telegram groups that, no, you can double your money and whatever. Don't. I can also, make a video of my winning trades and, not put up any of the losing trades and make you guys believe that I win all time. That's why I've decided to start going live and do my trading live. It's live on here, so all my mistakes come through, all the good trades come through, the bad trades come through, and hopefully we all learn from the mistakes. All right, so that's why I do live trading, for those of you who've been wondering. I just find it so simple that people put up these winning trades, and the YouTube is full of these people making millions on trades, but you never see them trading live. You just don't see them trading live, and that's where the problem comes in. That's why I can also make a couple of videos with all my winning trades and make it look like I'm one of the best traders on planet Earth, but unfortunately that's not the way it works. That's not how trading works. That's why I started trading now on a live stream. so we all can see the mistakes I make and the not mistakes I make. Okay, fantastic. I just want to mark out a couple of key levels over here. The reason I marked out that key level, this is on the gold, it's on a 4 hour, is because it is quite a nice trading point. What I'm looking for also when I'm in the market, when I do my analysis, and yes, we are also going to work on that trading strategy that we have, that we are busy working on. I'll get to that also a bit later on and see if it works. I think I must actually do it on here and see if it works here as well, but I don't think it will work, but I'll see. Anyways, what we will do is I'll do my normal analysis, and then after I've done my normal analysis, what I do with the market, and look at where I potentially want to put in my trades and put in my buys or sells, then we'll jump to our trading strategy that we're working on, the one with the Fibonacci, with the Fib, but we'll do that. Anyways, all right, so let's quickly have a look at the market. So we do know that we've got the unemployment claims coming up at 2:30 South African time, so that's coming up, and that is definitely going to move markets. Like I said yesterday morning in yesterday's live video as well, this is the one that's going to move markets, and hopefully I'm hoping that it comes out to a different number, either a higher number or a lower number. If it comes out to the forecast or is the same as the previous, then it's not going to be a lot of movement in the markets. Then we're going to be in a sideways movement for quite some time, and I don't like sideways market. That's not the way I like to do things. Anyways, let's move on. I'm gonna take my camera off so I can do the trading. You guys don't have to look at my face while I'm doing my trading. So here we go. Let's do this. Let's jump in. Okay, so this is my pound USD trade that I've got in. I like to work on the 6 hour time frame, and the reason I've got a buy order in here is because it is at a very good level of where buyers are. Now, what I look for in the market is I look for gaps. This is not the trading strategy. We'll work on it later. This is how I trade on my real account as well. This is a demo account, just for those of you who are wondering. It is a demo account that I'm on, that I'm working also, because I'm working on the demo account. What I do here, I do on my, well, except when we're busy working with that other trading strategy. But the way I trade, what I do here, I do on my live account as well. So what I do is I look for gaps like this. If you look at this area over here, you can see there's a gap, a big gap, a big gap. Now remember, this is 6 hour per candle, so that there is a huge gap, which tells me as a trader that buyers, not guys like me and you, big buyers, jumped in here. If it can create a gap like that and a spike like that, it means there is big buyers, big people that bought there. That's why the market was going up there. So that's what I usually look for. If I do see a gap like that, I almost immediately jump in. That's one of my good telltale signs that, all right, now it's time to join the market. But that's what I do. Okay, so we saw like a spike to the upside, and here we've got a break of character again. So when I look to buy or to sell, this is what I do in my normal trading is. So I'm going to use this one here as an example. So what I did was I see, okay, here is the last basically good swing after a nice one. That's the high, the last high. You can work on this high here as well, but it's not a very nice high because you've got the double tap over there. You can use that as well. So that is your last last swing high, and you see the lows aren't breaking the lows anymore. It's now equal lows. So once price action, and especially with this gap here, broke through, I knew, okay, the market is now in an uptrend. But what I wait for, as soon as I see a break of character, that where market structure, this is now in a buying, but you can do that as a selling off as well. Once I see that we have a candle breaking through the last high the last high, once you see that, then I know, okay, we have a turn of tides. We are now looking for buying opportunities, especially coupled with this big gap over here. So I know what I wait for, because to avoid fake outs and fake breakouts and so forth, I wait for this to happen. As soon as I see a breakout, a break of structure, a break of character, some people call it, but break of structure, once I see the previous high is broken, I'll do that on the selling off now as well. Let me just use a buying as an example for now. So once I see that break of the previous high, I see, all right, price is broken through. Now, I don't just automatically jump in and look for a buying opportunity. I wait for a second drive. Basically, what I want is, okay, now I've seen that we have, no, I don't want that to be moved. Go there, I'll set it right now. Once, it's on that freaking thing, man. What is that? I can, it's the trade I'm in now. Okay, so let's just use a different one there. I didn't see that. Okay, so once I see that we have that break, I mark off the top there, and now I see that is some sideways movement, picking up some momentum, picking up some money. I wait for that second break to the upside. Now there is your second break. Now that confirms, that tells me that the market is in an uptrend. That is my confirmation. Once I see that second run, that's my confirmation. Now I am going to start looking for a buy opportunity. So what I do is I take my recent swing high, I take a line and I mark it from the very tippy top of that wick, and that is where I will put a buy in. I still want to put a pre-buy. Once I see that this market is going up, so even before it breaks to, I have a break of structure again on the candle that broke the previous structure. That is where I mark the wick. Even if the market is there, I put my buy order in there, because majority of the times the market will come back to where that top is and then make a run for it. So there is where it will pick me up, and I will be in this trade. I will stay in this trade for days until I see what happening again, a break of structure. So there is the last low. So now I'm waiting for the market to break down. So you have to remember that. So that is where my following stop, my take profit. I will always have a take profit just below the once I see that, okay, we've got another down and market moving up, so I move my stop loss to take profit, and I just do a following stop. There, market came down, we see a break to the upside, so I'll make my take profit there, my stop loss to that, so take profit there. Now I see, because I need price to break this structure. I need price to break this wick over here. This is the last swing low, and there I see, okay, I'm still in the market, but there I'm taken out for a nice profit, and I see, okay, that also tells me that it is now a break of structure. We have a change in direction. So I see that it is broken, the previous low is broken. There with this candle over here, let me just move it up to that side. I see it, we have a break, and that is where I'm waiting for the second movement. So there's the movement that broke it, and there is the second movement over there. So that is the candle that broke it, first move, and it found support, and there's the second break. So now that candle there confirms that, okay, we are in a downtrend. So now what I do, once that candle has broken through for the second time there, now I take it to the very tippy top of that candle wick, the very bottom of the wick, and I put my sell order in there. So even if the market's still here, I got my pre-order in. And what happens is it comes back. You do put your stop loss. I do put stop losses, but I put them usually at the swing of that break. So basically there is where I'll put my, just above that is where I'll put my stop loss. gives me ample enough space, and that's where I put the stop loss. So now I'm back in the market again. It picked me up there, and we are now running. Now you take your stop loss, and after every break, there's the last swing low, and still touched it. Now there's a break. So now I'm waiting for market to come up and make a second break. So there's a second break. Then I jumped in here at the tip. So now I take my stop loss and move it to there, to just above there. So now I'm waiting for another break to the downside. Now I see, okay, it's playing around, break to the downside there. It broke that low there. Yep. So that confirms that that is the next swing low. So I'll move my stop loss to there while I'm in profit now. So now I see, okay, market's coming back. Now we're still not in an uptrend. Ignore this. I usually don't trade with any moving averages or anything like that. I just purely use information from what I get from the market, when markets are going to move, by seeing what's going on with the news wise, and then I use my chart. Alright, so there is the next break of structure right over there. It broke that low over there. So now I take and I move it to that one that did the breaking. There we go. My stop loss is there in profit. Now what's happening here is the reason why I put a buy in here, and this might be a bit of a forward thinking method, or just something that I've done quite often, and I keep doing it because I look at what the market is telling me, and I look where the buyers are, the big guys are, and I know the big guys are here. This is where they are. So I am sure that the market, once it gets here, but remember, I can still be wrong. This is just my opinion. This is just the way I do things. I'm not telling you this is exactly how it is. So this is just how I do things. So I put a buy order in. Where did I put my stop loss? I think I had my stop loss below all this in here. So there's my stop loss, and my take profit will be at that swing high over there. So I am currently in this market over here, but on the demo account, and then on my real account I am in this trade over here, because I'm sure that from here price is going to move to the upside, especially when I start seeing some nice wicks. As we get closer to the zone, you can start seeing wicks. Look, when you're far from a zone, a very important zone, you don't see big wicks. As soon as you start getting closer to a zone where the buyers are, the banks, institution, big guys, once you get closer, you're going to start seeing some radical movement, some big wicks and so forth, because these buyers here don't want price to go below this. They don't want it, because this is where all their money is. They want price to go up. So that's why I put a buy order in here. Now that is not a confirmed method of trading, and it works out sometimes, but sometimes it doesn't. Okay, so that's why I use my brain from trading for a couple of years, to know where market is and where market might turn, and I use tools or rules when I do my trading as well. Like I explained this rule, we break a structure, wait for the second pull up, then put it there, and like I explained how I do my trading. But sometimes, yes, I do jump the gun, and I know it's not the right way to do, but the way I trade is I trade with very low lot sizes, very small lot sizes. If I use 0.5% of my trading account, it is a lot. When I trade, I don't trade with more than 0.5% of my account. Sometimes when I know and it looks like a very good setup, yes, I will jump to maybe 1.5% of my account, but that is when I'm dead sure or more sure. When something like this happens, when I got the second pull up and I know, okay, I'm in an uptrend, then because I've got a very small stop loss. See, on this one, let me just quickly show you guys. So my buy order would have been there, and my stop loss would have been just below that. So that is a very small stop loss. So when something like that happens, yes, I tend to get my lot size up a little bit, and take a bigger risk, but it's not I don't trade 10% of my freaking account. So I'll up like 1% or 1.5%. When I see it is a very, very good setup. then I'll do something like that. This is just the way I trade, and I hope it makes sense to you guys. If there's anyone watching, if you down in the comment section, if you want me to look at a Euro USD or either stocks or features, anything you want me to have a look at and do analysis like I do my analysis on it, I will gladly do it for you guys live every morning from 8 o'clock in the mornings. That's when I do my live stream at 8 o'clock South African time, of course. I will try and go live every morning, Monday to Friday, but it's not always possible because I am a musician as well. So, sometimes I travel, far. So sometimes it's not possible, but if I can, Monday to Fridays, from 8 o'clock in the mornings, I will go live, do my analysis, and we all can build this channel, and we can be a trading community and help each other to trade better. Because maybe the way I trade, maybe you guys spot something that I don't, and we can better this way of trading. But that's just where I trade, and I do swing trading. For those of you who don't know, this is swing trading. My trades stay in sometimes for weeks, 2 weeks, 3 weeks. That's why I like trading the euro, because I get positive swaps on the euro when I trade the euro. So Euro USD, Euro Yen, I like on my account, I trade the euro because my brokers are Tickmill brokers. For South African people, you can definitely use Tickmill. It's a very, very, very good brokerage. Very simple, easy to use, and they give you positive swaps on when you trade in the euro currency, or when you trade euro. If you don't know what swaps is, go and have a look. You can just Google swaps to get a knowledge of what swaps is, for those of you who don't know what swaps is. And commissions, of course, they have got such low commissions. Tickmill is so low on their commissions. It is absolutely fantastic to trade with Tickmill. Anyways, so that's the Euro USD, but the pound USD. That's why I got this trade in over here, is because from my years of trading, these gaps tell me a lot about a market, a lot about what's happening in the market. And the longer you trade, the more you will start seeing these things and then base your trading on it. But anyways, we're all just waiting for 2 o'clock. Let me just go down to the gold as well quickly. I just want to see the gold. Like I said yesterday, we're going to have just sideways movement, and that's exactly what we're getting. Sideways movement. The gold is waiting for that unemployment to happen, the unemployment claims to happen. That's what gold is waiting for. Now, I do think that we're going to see gold, because I am bullish on the gold. I do think we're going to see gold heading up to the 2,500, and I think that's what people are looking for, is the 2,500. We are so close to the 2,500. Look, if you look at the 2.5 mental number, I'm just going to make a thing there, 2,500. That is where I think gold is going to head for. That is what I think gold is aiming for, the 2.5. That will probably be our next stop on the gold, especially if those job claims number comes out positive, the unemployment claims comes out positive, then we might see comes out negative, the job unemployment comes out negative, then we're going to see gold probably hitting for that 2.5 mark, because I think that's the next step we're aiming for, is the 2.5. And this is a very good rate to buy it on. It's a very good price to buy now on the gold. We've had a nice going low, going down, very nice downtrend. This is the 30 minutes. Let me just go to trading view quickly. I just want to have a quick in-depth look at the gold. So what I want to do is jump to the daily market quickly on the gold, and then we'll see from there what happens. South African internet is very slow. Alright, so let's have a look. Let's have a look at the daily. I just want to do some quick analysis over here. I just want to have a look. Bless you. Okay. That is a very, very big. Okay, so what I'm going to do with this one is I'm going to make a box here, because this is definitely a big buyer's gap over here. Make it green, please. All right, so we do see this as a very good support here. And remember, I'm on the daily now, so on the daily time frame. So we do see gold has got great support over here. Very, very good support. So I don't think we likely to see gold breaking through this to the downside. This is a 2,300 mark. Let me see, 2,300. What's the lowest point there? It is the 228. All right, so make it a 2.3. It's a 2,300 zone. Then we still got these little ones over here as well. So this is not a major line over there, but I do see that it was used as resistance and support, but it has been broken through. So it's not like this is a solid. You can see when I explain about solid and temporary lines, support or resistance, you get a solid. That's what I call it, a solid support or solid resistance, and you get a solid and a temporary support and resistance. So this one is solid. You can see it's been tested 1, 2, 3, 4, 5, 6. It's been tested a couple times and no breakthrough over that. So this is a solid support. And I like to use my lines as temporary support or resistance. So like this line over here, you can see it has been tested a couple times as resistance. Support over there, but it broke through, then it's been resistance again, broke through, been support, so here it is acting as support, and it's been a support there twice, but because it has been broken through a couple of times, it's a temporary support or resistance over here. So we might see, from what I can see here, if the market goes good, if a change comes in here, we sit with a, I just want to take that one away quickly there. So we do have this, basically it's not a temporary resistance, to me at this stage, this is a solid resistance over here. So this is what we're sitting with at the moment. I'm just going to make it nice and long because it's probably going to bounce here. So we do see sideways movement, even on a daily basis. We see sideways movement in the gold. It hasn't broken through to the bottom here yet, but it might come down for another take at this. We'll see. There's no higher high yet, so we'll have to see where it goes. At this stage, what I can see from the gold is it is in no man's territory here. There's nothing here basically for it. Let me just get a line in here. I just want to see something quickly. There's nothing here. Okay, so there are these zones over here, but that's that over there. I don't see any significant stops over here. Maybe down on the 4-hour time frame we'll get a better look at this. But if you can see, it's equal highs. It's not like a lower high or something where you can say, all right, now we're in a downtrend. It's equal highs. So the formation that I see here, this is a very solid indication of a flag type formation where you see something like this usually happens. This is where it doesn't bounce between the two, bounces, bounce, and then either break to the downside or then it breaks to the upside. This is usually what happens when I start seeing this formation where it's not completely at a high, doesn't make a high, doesn't make a lower low, it's just bouncing around. Usually that is the start of a formation like that. So we might see this gold bouncing around here still a bit to the upside, maybe down to the downside. We'll have to see where it goes from here. But at this stage, gold is in no man's land. There's no direction, there's nothing, there's absolutely nothing. That's on the daily. So let's go back to the 4-hour time frame. I just want to level it up here a bit and see where we are. You see there's those two there, there's that one over there. So yeah, that was a nice fake out over there, a nice down. So gold did come to you. Look at this. Yeah, I didn't even see this. This is a massive wick that touched that one. So this looks to me like a nice flag formation. So we might see gold breaking a little bit more further down to the downside to touch this one, and then up to the upside. This is where gold is at the moment. It's just in no man's land at the moment. It's just not, it's in between this support or resistance, so it's not even respecting that anymore. It's just hanging around, just doing absolutely nothing. But we'll see from here every 4 hours. But I'll keep you guys updated on what is happening and what's going on in the markets. But yeah, if you have any comments, please comment down below. And if you want something, if you need something that I need to have a look at, ask me as well. I'll have a look at it and do my analysis and see what I can see. You know, that's all we have to look at. And I do see that. What I think of the gold is, yeah, the sideways move, and these people are just waiting for the jobless claims to come through at this stage. What I want to do is I'm going to mark this channel that it's in. I think that's what I need to do, is mark this channel that it's in. Okay, that would be a red color over there. I just want to put another one in there as well. I just want to mark this channel that it's in at the moment, and that will be a green. Because if you are scalping, this might be a good indicator of where the markets might go. So let me just do it properly over there. If you do scalp, I hope this will help, because we might see some good sideways movement within this until it gets some direction with the unemployment claims coming through. Anyways, that's my analysis for now. If you have anything I need to have a look at, feel free to ask, and I will definitely have a look at whatever you want me to have a look at and do an analysis on it. But for now, let's see where the gold goes. Okay, see you guys now. Alright, so what I see now, if I just want to explain this quickly to you guys as well. While I'm on it, I've been looking around now, I've been setting my mind to this, and if I see, I'm working on my strategy, the way I'll do things is like I was looking at this gold now for a second. I'm like, oh, okay, so that's my strat actually. Once it breaks down, you know, break of structure there. It did the second run, so we're staying there. So after it does the second run, it doesn't come back to above there. 100%. I would have put my sell order in there, and that would have been a good run. So that's my sell order, and do a trailing stop. That was the next high there. That was the next high there. Above that, came back, almost smacked it, but didn't. So that would have been the next lower high over there, and then that is the next lower high over there. So what I'm looking for is I'm looking for gold to break this. Once it breaks that and moves towards the upside, I'm going to wait for a candle to break. Once I see a candle break and comes back, I'm going to wait for a second wave. Then I'll use the top of the breaking candle as my buy entry. Okay, so just to explain to you guys, I just want to see, maybe there's a different one over here that I can use quickly. Different explanation. And that's all uptrends over there. Okay, yeah. Now this is a good one. Let me just grab that quickly. I just want to grab it, move it closer. So basically, this is what I'm looking for at the gold as well. Okay, so here, this is the last swing high over there, right over there. So what you wait for is you wait for gold to break the last swing high. Now you could have taken that as a swing high, you could have taken that. So all of these are swing highs. So these are high there, these are high there. So you could have taken any, but anyways, let's work on this one. Okay, so let's take that as your last swing out. So once you see gold break through, nice, comes back, and then it does a second run. Once it does its second run, you work on that swing high over there. The swing high was broken, broke through, and it came back, picked up, and run. You would have been at what? Which one is the break? That is the broken one there. Okay, so that's that. So you would have had your, let me just see, there's a break one, and then there's the run. Didn't do a full run, so that's fine. Let me just see if I can work this one out. See, without, you see, that's why I like testing live. Okay, let's start from the start. So there's the break of that one, the break of structure over there. Alright, you had your break and came back for that, but you wouldn't have picked up that one, you wouldn't have been in that trade there. So, because there's a, okay, and it broke there. So with that break, you would have had your entry over there. It didn't come, so you wouldn't have been in that trade over there. That's just a quick down. So you wouldn't have been in that trade. Okay, so there's your next swing high. There's your next swing high. It did break, but it didn't continue on, so that's not an up movement. So it's still a down. Yeah, basically that would have been your last one over there, your last swing high. So let's use this. This one is not long enough, so let's delete that. Let's use this one here as, okay, so that's your last swing. So now you're waiting for gold to break that last swing high. So there, gold broke it with that one, and it did a second run over there. So now you know this is a valid entry. So let's work this out quickly. Okay, because otherwise, actually, no, wait, you see, That's not the one there. Here's the one. Down here. You see there's that. The last bit down. So that is your last swing high over there. Gold broke through, did a second run, so you would have had your buy right over on that the broken piece right over there. So yes, you would have been picked up in that trade. A buy. Okay, so that's another swing low there. That's your latest swing low there. That's your latest swing low there. And that's your latest swing low there. So okay, and then there you would have taken your profit. Would have taken you out the trade. Now that is the last swing low, and as you can see with that swing low, it's not a very nice swing low, but it broke through, did a second run, so you would have been in this trade here, looking for sell opportunity, been in the trade, selling off. There is the swing, so you would have been in there, gone down. Okay, so you would have been in profit over there because it would have taken you out. Now, so it broke through that profit. You wait for the second run. You put your take profit, or you put your buy order on that. So you would have taken there. It would have picked you up on that one. And remember, your stop loss is below this one. So this is where your stop loss would have been, right below that one. You've had a buy order in there. Okay, good. All right, so you would have taken your stop loss, move it up to that swing low. Where's your next swing low? Right over there. Okay, right over there, swing low. Where's your next swing low? Right over there. Been up, so it would have taken you out the trade over there. The breakout structure. I just want to work this out basically. So this is basically how the back testing goes. Okay, so here you see breakout structure came through, came back, but it didn't do a second run. So you wouldn't have been in this trade because there's no second run. There is another run over there. So that is your run. Been up there. So that would have been, because that is a proper breakout structure, but it came back up, so you wouldn't have been in this trade. You would have taken it and have that as your high. So you're waiting for the next one to be broken, or one to be formed over there. So either your low or your high over there. That's cool. Let me just bring this one up. So you would have been waiting for either of those to be broken. It broke that one, but came right back down again. Didn't do a second run, so that's not a thing. That low is not broken. That high there is not broken at all. That high there is not broken. So here, not broken. And this is the low again. Not broken. Not broken. Okay, so there we have a break of this high, broke through. Now that was the first run. Okay, waiting for the second run. It would have been over there, so it would have picked up, but you would have actually been at a loss over there. Okay, so it would have knocked you out. You would have been at a loss. But that is the latest swing low, so now you know it's a break, so you're waiting for the second run. There's the second run. Once the second run happens, you put your sell order there, because that's where the break happened, and that's that. So you put your sell order there, and you would have had your stop loss above that one, right over there, because it's now reverse side, so because you're going down now, otherwise it's on the other side. You would have been in this trade, so you would have taken your stop loss, moved it there, moved it there, okay, moved it there, moved it there, alright, and then now moved it there. Okay, so that's where we are now. So you would have still been in this trade there at a sell. Okay, so that's where we are now. At that. So this is what I'm just waiting for. I'm just waiting for this one to break. Okay. Okay, so I just had to just work it all out quickly again, so I just know exactly where I am. So even my strategy says that we're probably gonna, once if it breaks through there and does a second run, then I'm gonna be looking for, well, then I'm gonna put my buy in, and I do think my bias on this is also buy. Is on the plus side. I am on the bullish side of gold, so I do see that as confirmation. Let me just get these ones gone quickly. Okay, that is as a confirmation. And then later on we'll work on the, once I've seen this, I'll work on my my Fibonacci strategy. Well, not mine, it's our Fibonacci strategy that we'll work on a bit later on. Alright, that's all. I just wanted to go through there quickly just to make sure everything's fine. Lekker. Alright, so ladies and gents, what I'm going to do is I'll go live again at basically 20 minutes past 2. I will go live again so we can see what the numbers are of the unemployment claims. Now, if it is more than the forecast and more than the previous, it was at 250,000, 251,000, or even for about 260,000 claims. Then, if it is more than that forecast or previous, then we will see a significant spike in the gold and in the pound USD and the euro USD, anything that's against the USD, we will see, because that will be very, very, very bad for the dollar. So if we see anything less than 241 or 249, if we see less than 241, then we might not see that big incline on the gold and all the other currencies that are against the US. So I will go live again at let's say 20 past 2 South African time, and we can definitely check this thing together and let's see how it goes. So be prepared. 20 past 2 I will go live again, and we can see what happens with the unemployment, see what the markets does. From my side, was a good see you. Please like, share, subscribe, and I will see you guys again on the flip side. Cheers.